Hello friends, welcome to my YouTube channel Mutual Fund Maestro. Today we'll be discussing an untouched topic as regards mutual funds, that is mutual fund subject to default risk for its investors? We all know that mutual fund schemes are subject to market risk. But we, the common investors, often get confused with default risk and market risk. So to understand whether there is risk prevalent, that is default risk prevalent for a mutual fund scheme for its investors, we need to understand or we need to know what is default risk first. Default risk arises from non-payment of principal or interest therein or both. If an investor does not receive redemption proceeds upon placing redemption requests from a mutual fund scheme, we can say that that particular mutual fund scheme is subject to default risk. But is it possible? In a nutshell, we can say that that scenario is practically impossible but theoretically possible. Why we say theoretically possible is that particularly for a debt mutual fund scheme, it is possible. Why? We know that debt mutual fund scheme predominantly invest in debt instruments, that is bond, debenture, corporate papers, etc. So, being debt instruments, debenture, bonds and corporate papers are subject to default risk. That means it can happen that that particular company which is issuing bonds might not pay interest thereon or the principal amount upon maturity. So if that happens, then the mutual fund which invests in that company's paper or bond faces default risk. Hence, by selling the debt instruments, the mutual fund will not realize the sale proceeds. So if that happens, the NAV of that particular mutual fund scheme falls. So does it result in default risk for the investors? No, because we cannot correlate the default risk faced by the mutual fund itself and investors who invest in that particular mutual fund scheme. Why we say? Because the risk and the return of a mutual fund scheme is shared by the investors of that particular scheme. So if NAV of a mutual fund scheme goes down, the loss will be borne by the investors itself. But a particular default risk faced by the mutual fund itself does not result in default risk faced by the investors of that particular mutual fund. Practically, it is also impossible because a debt mutual fund scheme will not invest money in a debt mutual fund scheme will not entirely invest in unrated papers or illiquid debentures or debt instruments. And also, all the investors of the particular mutual fund scheme will not place redemption request at a time. So we cannot correlate default risk faced by the mutual fund and the default risk faced by the investor of that particular mutual fund scheme. Till date, it has not happened that investors of a particular mutual fund scheme have given redemption request and they have been declined. So from today's discussion, we can conclude that theoretically for a debt mutual fund scheme, there is default risk prevalent. Mutual fund also faces default risk. But as we cannot correlate default risk faced by the mutual fund itself with risk faced by the investors of that particular mutual fund scheme, we can say that practically the default risk is not prevalent for investors in a mutual fund scheme. So if you like my video, please subscribe and kindly help in developing my new YouTube channel Mutual Fund Maestro. Thank you.